Ticker symbol ENSC could be in line for a nice move to the upside. Let's validate now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you on January 1st, the very first day of our new year 2023. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and touch on the analysis for ENSC. We are starting off on the bi-hourly chart, and we're gonna do the short-term time frame analysis with the Crypstex indicator. So these are the ARC-Series indicators that you're looking at here, and we're gonna first touch on the first indicator named DBSI. Okay, so DBSI is a statistical indicator that takes a metric based on every single candle print throughout the entire trading history of the asset, particularly in this case on the bi-hourly time frame. So as you can see, every single candle does have its metric taken. So the reason why it takes a metric is so that it can give us a strength value, and that strength value is represented by a percentage right up here on the blue and red bar. Okay, so you're looking at 82% bulls leading the bears with an 18%. Okay, so and now DBSI does have buy and sell signals as well, usually presented by a blue bar or a blue circle, sorry, for a buy signal, and the red being a sell. Okay, so in this case we can actually see that the buy signal came in at the opening of this candle here on December 30th, and it actually opened up at about 64 cents, and now the price action is sitting closed at about 72 cents. So very good signs coming up on this. Okay, so now another thing that DBSI does is that it does recognize when we are above or below the 13-day exponential moving average. In this case, you can see that we are clearly above it and still looking pretty bullish. Okay, so if we can imply a type of support, we can potentially find that right at about 69 cents, coming back to the 13-day exponential moving average, followed by a bounce to the upside. Okay, so now we're going to look at the ARC enhanced MACD, and this is actually another indicator that could be available to you within the subscription packages that we have to offer regarding the Crypstex indicators. Okay, as Crypstex has actually endorsed me or partnered with me, if you will, and they have given me access to some excellent tools for trading, since they do believe in my style and believe in my ability, right? So in this case, let's go ahead and now take a look at the enhanced MACD, as it does have buy and sell signals as well, and you can see that the enhanced MACD came in with an aggressive buy signal just in line with that DBSI buy signal as well. Okay, so now the enhanced MACD is loaded also with a Bollinger Band. Okay, so in this case you can see that the Bollinger Band has very much contracted into a very tight space, and we now have that buy signal printed on December 30th in line with DBSI, and you can actually start to see that the Bollinger Bands are now starting to expand. That usually happens when a move either to the upside or to the downside is about to happen. Okay, so very good things lining up here. Okay, so you can see the contraction here, and then it expands and explodes to the upside, right? Just like here, it contracts, and then it starts to expand. We get the buy signal, and then it goes up, right? So it's looking like we are about to, we've been prepping this for kind of a while, so this is looking pretty good, and I'm talking about a while relevant to the bi-hourly chart. Okay, so in this case, yeah, it's looking like it could be presenting an upside move in the immediate short term, okay, possibly midterm. So now let's go ahead and load up one more ARC series indicator, and this is actually going to be the ARC Armor. Okay, so now ARC Armor is comprised of several exponential moving averages, all placed together very close in proximity so that we can be able to gain a directional wave. Okay, so now these directional waves are able to give us buy and sell signals as well. So for example, here you get a long signal, here goes up, you get a short signal, goes down, long up, short, go all the way down here, and we get a long for a short one here, and then a short for the downside. So now the reason why I'm pointing this out is because it does have a long signal printed as well. Okay, and another very good thing that to notice within this is that the directional waves or the exponential moving averages are now starting to print or give us the hint of a continuation to the upside based on these little tiny green lines. Okay, so please take a look at other iterations so where you can actually see where that where that print from red to green can happen, just like this. Okay, so it looks like we're potentially making something like this happen. Okay, so where we can make an upside move. All right, so that is going to be it for the Crypstex indicators. Let's go ahead and move on to the next chart so that we can gain a deeper edge for Tuesday's trading session and the first trading session of the year. Okay, if you are interested in acquiring these indicators, please don't hesitate to send me a DM on Twitter or on Discord. The links will be included in the description below. Okay, you guys. So we'll go over the subscription packages on this. Another thing to remember is that the indicators are not part of TradingView's subscription package. Okay, so you would have to essentially create a TradingView account, whether it be the free one or any type of paid subscription, to access these indicators after you go through me. Okay, so start your TradingView subscription, then refer to me so that we can go over the subscription packages regarding the indicators. Okay, Crypstex they are authorized retailers within TradingView and have nothing to do with their plans. Okay, so let's move on now. So yeah, we're gonna go ahead and move on now to the statistical side of the analysis, and in this case we can actually see that out of a backtest regarding or including a volatility versus momentum, we have actually taken, let's see, throughout the entire trading history on the 12-hour chart, we have taken note of every single iteration where we have actually gone into the 90 percentile, which I consider to be critical volatility, and contracted to the downside alongside momentum making an upside. Okay, so this combination has given us, well, particularly first, I want to give you the upside thrust that I measured, the duration of the iteration, and also however many times volatility versus momentum have guessed the upside correctly versus incorrectly. Okay, so in this case, the metrics came back with something pretty interesting. I wish that there were more iterations to the tests, but this is all that we got to this is all that we have to consider, but it's okay. You know, we're looking at this and in fact, we should be looking at it on the daily chart since this is a 1-day back test. Okay, so we can actually see now that the signal has fired off. We are now starting the contraction phase from critical volatility, and it looks like momentum is starting to suggest some upside. Okay, so this is why I'm saying that the statistical move may be in play. Now remember, these are statistical metrics. They are not certainties, but we're looking at a total of 14 iterations. 12 of those 14 were actually guessed to the upside correctly, giving us an upside accuracy of 85.714%, with an averaged upside thrust of 60.005%, over the span of just over 33 days. This is proof of work. Okay, so please remember, remember the average duration is giving us 33 days. This does not mean that it's going to fire off tomorrow. It does mean, however, that we have an average of 33 days. Please do keep that in mind, that it's about a month. Okay, so if I were to consider upside from this, we can actually imply actually where we can be. Sorry, I got a little distracted. I think pizza just showed up and that's being picked up at the front door. My apologies. So yeah, let's go ahead and now imply that 60.005% to the upside. It's not going to be super exact right here, but we'll go ahead and do our best, right? So 50, this should be fine. 60.35%. Okay, so you can see that actually the price action regarding the statistical upside would essentially take us right to the 21-day exponential moving average. Okay, so this is usually a moving average that I like to see in higher term time frames, maybe some short term time frames too, but yeah, this is highly regarded. Okay, so in this case, we can see that that total would be at about $1.20 from our current 75-cent position, but after market hours closed at 72, just so you can be clear. Okay, so daily chart and up will not show us aftermarket value. So daily chart will actually show us just the market close value, and 12-hour and under will give us the after hours trading, the closing. Okay, so very important thing to notice here. Let's go ahead and move on to the next chart, as there is in the immediate short-term time frame, we are building a descending channel. Usually descending channels do present a bullish outlook. However, this may still be traded a little longer, but it's entirely okay. So judging on raw price action here, we can actually see that we faced a rejection from the 30-day exponential moving average. We are now below the 50-day simple moving average and look like we're very much approaching the 7-day exponential moving average and or the 10-day simple moving average. So in this case, we can actually see a potential downside touch to these areas here. Okay, so potentially to 69 cents. I can actually provide a range for us to consider in the coming sessions. Okay, so we can actually, based on this price action, right, we can see a potential touch to between 66.05 and about 69.13 for an accumulation period before a continuation onto the upside. But please do notice that all these other boxes that I have here are gaps that have been already closed, right? I just keep them in place for future play in case we do come back and test them, right? So now, yeah, a very important thing to notice there. So yeah, this is the 60% to the upside, the statistical metric. And you can actually see that upon realizing that move, we can actually see confluence with this candle high, and that candle is the December 19th print, and the high of that candle is about $1.16, and the suggestion is about $1.20, a dollar, right around there for the 60% move to the upside, right? $1.15 to about $1.20. So please remember the 30-day or 33-day averaged duration. Okay, so now let's move on to the last part of this chart, which is yet another validator for the upside continuation. Particularly in the 12-hour chart, we can actually see 1, 2, 3, and 4 primary drives of hidden bullish divergence, which usually happens when this is regular bullish divergence, which usually happens when price action is showing an opposition to momentum. Okay, so in this case, momentum represented by RSI, which is the relative strength index. Okay, so this is able to give, it's a very popular indicator used amongst a lot of pros, a lot of retail, a lot of institutions. It's a very common indicator. Okay, so you can actually see that the price action is making a series of lower lows while the momentum is making a series of higher lows. Okay, so we can see that we are accumulating drives of bullish divergence. So this is a very good thing, and it looks like it may already be in play. And by that I mean like this. Okay, so every single touch of these divergences have been accumulating, and now we're making that move. So particularly to the 12-hour RSI, you can actually see that we've already made a move above the 14-day simple moving average represented by this pink line. The purple line is the RSI signal itself. Okay, so very good thing to notice here is that now we are above the deep areas of the bear strength percentile. Okay, so the bear strength percentile being this last zone here. So please focus in on those zones on my diagram that I've blown up here for your convenience, as I will be speaking about the zones for the next couple minutes very often. Okay, so yes, we are moving above the moving average. Very good thing. We are above the deep areas of the bear strength percentile where we can actually face where we can actually face a gravitational pull into the prior zone. But in this case, since we're above that deep area, we can continue on to the upside. Okay, very good sign here. Now let's go ahead and open up a multi-pane so that we can gauge a deeper edge for the coming sessions. Okay, so in this case, we're going to start off with the immediate short-term time frame analysis, and that's going to be the 30-minute RSI, suggesting the downside that we were looking at based on raw price action. Okay, so you can see that the RSI signal is suggesting some downside here. The good thing is that we do have the 14-day simple moving average below us, which can be used as a form of support before continuing on to the upside. Okay, so and the bi-hourly looks like it's also suggesting some downside as well. Moving average below us, very bullish. Okay, so remember that I was suggesting for us, based on price action, to come back down to that area between about 69 cents and about 66 cents for reaccumulation, and this area is very much considering the 10-day simple moving average and the 7-day exponential moving average. Okay, so in this case, we can take a Fibonacci retracement inversely, and we can actually see that the 1.618 golden mean, which is a very important target that retail likes to take the trade to generally, you can actually see that it's using our implied target, between the SMA 10 and the EMA. Okay, so in this case, you can see that the one spot 272 at 69 cents and the one spot 618 at 66 cents. Okay, very much confluent here, and I do believe, I can tell you that the likelihood of coming back there in the immediate short term, I'm talking about early session, it could potentially happen. Okay, now the reason why my bias is still remaining towards the upside and remaining bullish for ENSC is based more on the higher term or medium term timeframes. Okay, so the 6 hour is suggesting a continuation onto the upside. It has made a bullish cross above the moving average and now approaching the shallow areas of the bear strength percentile, indicating a continuation to the upside. Okay, now the daily time frame, since we already saw the 12-hour time frame on the divergence chart, is suggesting a continuation onto the upside. 14-day moving average is now below us, and we are definitely above the shallow area. The deep area of the bear strength percentile, suggesting upside. Okay, by daily is suggesting upside, still within oversold percentile. Careful, because we do have the moving average as a resistance right above us. 3-day is suggesting an upside, again with this 14-day moving average above us as well. Okay, so now 5-day is also suggesting some upside. So the limited upside that I'm getting here, based on having the resistances as the 14-day moving average, is actually why I believe that the statistical metric to the upside may actually happen and face heavy rejection at that 21-day exponential moving average at $1.20, between $1.15 and $1.20, before retracing. Okay, because at this point we do have to see it as just another macro, or just another lower high on the grand scheme of things. Okay, so if you're looking at price action like this, let's just go ahead and block all the visibility from the indicators. You can actually see that we're just making a series of higher lows, and this would be no different at about 115. It'll just be another low. Okay, so I think this will be pretty good to leave off here. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, I cannot suggest for you to buy or sell any assets. Okay, you guys, I need you to do your own DD, and everything will be just fine. Okay, but yes, if you want to get in touch with me, I know that there's a little bit of lag within that. There's a lot of messages coming in, and I'm having a little bit of trouble replying to everybody, but rest assured that I will try my very best to get to you. Okay, don't fall for the scam comments in the comments area below, where they say to WhatsApp me. Know for a fact that I do not have a WhatsApp. I would honestly not provide my phone number or WhatsApp number on, even if I did have one, on the comments below. Okay, you guys, those are all scams. Don't fall for those scam artists, and make sure to keep your money for better opportunities in the trade. All right, you guys, but with that said, I wish you well, a very good night, and a great rest of your hopefully long weekend, and I will catch you at the first trading day of 2023 on Tuesday at the bell. Okay, adios.